Want to talk about business owners and Medicare. We were helping out Paul the other day, who came to us because he has his own company and he's not really sure if he has to join Medicare, and he's also trying to figure out why or if he'll pay more for Medicare because of his company's profitability. So in this video, let's break down how Medicare works for those of you who are business owners and things to look out for to both save yourself as well as your company money. I'm Emily with the Medicare Coach. I'm an independent Medicare consultant helping our clients easily navigate all parts of Medicare, whether it be the insurance company rules or the government rules. And so we talk about very different things because we are not an insurance agent or a broker. So let's go ahead and jump into this. If you are a business owner, there are a few things that I want you all to take certain steps to understand what is your right Medicare decision, both for yourself, but also for your company. And the first thing to be aware of is that it starts off by understanding, does your employer plan health insurance meet Medicare rules? So Medicare rules say by the time you're 65, you either have to be on Medicare or on an employer health insurance plan that meets Medicare rules. Now, in order for an employer plan to meet Medicare rules, there's kind of three main requirements. Number one, the employer plan cannot require you to have any Medicare Part A or B. Okay. Number two, the company has to have at least 20 employees or more. If someone is under 65, the company has to have at least 100 employees or more. And requirement number three is the prescription plan deemed creditable, which means the plan on average covers medications as well as or better than Medicare. So if you're a business owner, your plan either meets Medicare rules or it doesn't. Okay. Now, if you don't have 20 employees or more, whether it's you or your employees, they're going to want to at least join Medicare Part A and B to, one, meet Medicare rules, and to, two, have complete health insurance coverage. So be aware of that. If your company has more than 20 employees, then yes, both you as well as your employees could stay on the employer plan, assuming that all the other requirements are also met. Now, if your employer plan meets the Medicare rules, you're usually better off staying on your employer plan if, one, again, the employer plan is cheaper, but for your case, we have to look at both what you pay as well as your company pays. Now, we tend to find that if business owners have high incomes, which as I record this is about over $200,000 or more filing as a couple, if you have that high income penalty, you're usually better off staying on your employer plan because those high income penalties can make Medicare pretty expensive. But it's worthwhile to compare the cost to know what to do, okay? If you don't have a high income penalty and your company still meets Medicare rules, you could be better off leaving your employer plan and joining Medicare. Now, there's a bit more to that analysis to confirm that, but my point is that there's important things to be aware of for both you and your employees. And if your plan does meet Medicare rules, you likely want to compare the two, and it comes down to a cost comparison, okay? If your employer plan does not meet Medicare rules, both you and your employee wants to come off of your employer plan. At the end of the day, this usually saves, especially small companies, a lot of money. And it also usually saves you as an individual or you as an employee a lot of money as well. So again, we want to understand, does the employer plan meet Medicare rules? And if it does, we go down one scenario. If it doesn't meet Medicare rules, we're going to have to automatically join at least Medicare Part A and B. Now, if you're an employer and you're going to have to join Medicare anyway, like our client did. He was trying to figure out why is he paying so much more for his high income penalty, because the company makes a lot of money. And the thing is, depending on how your company is set up, whether it's an S Corp or a C Corp or whatever else, there are different rules in how you get taxed, right? And in most cases, S Corp profitability goes directly down to the business owner. And so yes, this client, because they're an S Corp, always showed his company's profitability. And while his company was profitable, we can't appeal that high income. Now, if he were to go to another type of corporation and limit his own personal income, then yes, he could probably appeal his high income penalty. But again, there's other tax implications to that. So my point is this. As a business owner, I want you to think about, one, does your employer plan meet Medicare rules, and how does it apply both to yourself as well as your employees? And number two, if you do have a high income penalty, How does your legal setup of your company impact that? And can you actually appeal it? Again, there are ways to appeal it if certain situations are true. But we want to look out for those things because, again, Medicare can be expensive when you have those high income penalties. But again, if your employer plan does not meet Medicare rules, even if you have that high income, you have to join Medicare. And we'll talk about different scenarios to try to reduce that high income penalty, but it can get a little bit tricky depending on how your company is set up. So Medicare is complicated, as I kind of covered in this video. It doesn't have to be, though. Make sure you check out some free resources down below to give you a shortcut into Medicare. The workshop is a great place to go for more details, more shortcuts like this. So click the link below, get some more details, and we look forward to helping you here at the Medicare Coach.